Saracen.
The limited time I have, I will try to focus on the Colombo Stock Exchange and touch on some of the main challenges, how we can address these issues, and why we believe it's important for us to focus our attention on ensuring that we have a vibrant capital market in Sri Lanka. As a party, we believe that. One of the primary challenges is political and economic stability. It's like trying to balance a plate of kottu roti on a wobbly road, driving at high speed in a three-wheeler, right? Having economic and political stability in our country. So it's such a tough job. Inconsistent policies cause volatility and wipes out a lot of value for no fault of the entities that are listed on the exchange. After this election, a general election will follow, and then there will be a stable government for 5 years. Our government, when elected, will have a stable economic and tax policy and will not make ad hoc decisions. We will implement a long-term, transparent tax framework that avoids sudden changes, allowing companies to plan and forecast effectively. For example, Vietnam has maintained a consistent corporate tax, allowing businesses to plan with confidence. This stability has attracted numerous foreign investors to the Vietnamese market. Our policy document, which Honorable Eran Wickramaratne is leading, will be released shortly. And that will give you guys the plan going forward. We are hoping that this will provide the stability that this country and this economy needs and that is required. Another challenge in our market is market participation. The Sri Lanka market capitalization as a percentage of GDP is just 16% as compared to its regional peers. In India, the market capitalization is like 102% of GDP, and in Bangladesh, it's 29%. This issue of market depth and liquidity, if you look at the Colombo Stock Exchange, which seems vibrant, but often it feels like a bustling bazaar with just a few large stalls and not more. That's one of the problems. Increasing the number of listed companies and enhancing market liquidity is crucial. Therefore, this low participation in markets are due to many reasons in our country. We've been trying to increase participation, as you guys know more than anybody else. And these problems, the challenges, have to be taken out. One of the main problems are the economic conditions. As you know, low disposable incomes amongst people because of high taxes and the increased cost of living. The amount of savings for investment becomes lesser for people, and less people invest money in the market. If you look at the interest rates, preference for fixed income government securities is something we've seen because of high interest rates. They find it much easier and safer to go and invest in government securities. Then there is the cultural aspect, risk aversion in Sri Lanka. And there is this cultural inclination towards conservative instruments such as fixed deposits and investing in real estate. People don't want to take a risk with the markets. That's one of the other problems. But if you look on the other hand, look at the CAGR, the compounded annual growth rate. If you put a 10-year fixed deposit, your CAGR is only just 3%. Whereas if you do your investment in the stock market, your ASPI, the All Share Price Index, if you see the growth, it's around 10%. So you make much more money investing in the stock market, right? But still people are risk averse, they are not sure. Why is that? What's the problem? If you take the breakdown of domestic savings in our country, over 65% of the domestic savings go into bank deposits. It just lies in bank deposits. Why don't they come to the market? Real estate about 20%, but whereas the equities market brings in only about 10%. That's pretty low. So we all have a big job to get this market going. Capital markets have to be built up for an economy to start thriving. The reasons for this low investment in the market, we believe, are one is financial literacy. It is critical for empowering individuals to make informed decisions because if you don't have financial literacy, people don't want to get into it, right? Enhancing financial education can increase participation in the equity market and contribute to the long-term wealth creation of the nation. I don't want to give you examples because of the lack of time, but if you take examples in Malaysia and Indonesia, they have educational institutions which trains people in financial literacy so that they can deal in the market. The other problem is market infrastructure, the lack of products. If you look at providing, we should be able to provide diverse exchange-traded funds, ETFs. We should have a market maker, actually. Most countries have market makers. And like many countries, we must try to increase participation. Develop ETFs that track local and international indices to provide investors with a range of options. This will bring more people into the market. Then we also have to encourage asset managers to create specific or thematic ETFs aligned with global trends. These are things that our market needs to work towards. Example of, take India, ETFs such as the Nifty 50, which is one of the top ETFs. Thailand Stock Exchange launched several specific ETFs, but we haven't thought about it. So Sri Lanka, if you want to grow this capital market and you guys want to see this thriving, that we have a lot of work. Then that's the other side of the issue of regulation. The need for proper regulatory process is essential to build confidence and increase participation. In the past years, the many scandals that have eroded public confidence in this system is frightening. While regulations are essential for maintaining market integrity, they must strike a balance between protecting investors and also fostering innovation. That's important. Striking the right balance between oversight and innovation is like actually trying to diet while on a holiday. It's a tough job. You go on a holiday, you can't diet, right? So between protecting regulation, trying to protect and to try and innovate is a tough job. But those are the challenges that we have to go through. It's tough but necessary. The EPF superannuation fund, which we all talk about, the EPF, right? If you see, is one which has worked in tandem without members having a say in managing their own funds. The members are not getting best returns on their compulsory savings. And there are experts telling us that the state monopoly should come to an end and should face competition from other providers. That the EPF funds, the workers should be able to invest their funds, their savings, in whatever fund they like. That they don't have to be compelled to go to the government because government is not managing their monies properly. So, meanwhile, it is something that we should think about. We are thinking about it. Meanwhile, we will want to introduce KPIs, also governance procedures, and ensure that fund managers are accountable to the EPF funds. And this captive fund could be professionally and transparently managed, be a catalyst for the growth of the capital markets. That's one of the important things. I mean, everybody thinks that if the EPF puts money, that'll be corruption. But we have to find systems of managing it transparently. And we think that we need to move in that direction. We are looking at it. The importance of a vibrant market for the reform progress of the government to be successful cannot be understated. We think the capital market is an important part for us to continue our reform process and to bring this country back. We know the importance. SJB gives top priority for this purpose. We are very concerned about it. And why we are talking about it is that there have been debates and discussions and lots of reasons. I want to tell you one of the main reasons what we think is that the lots of debates and discussions on the listing of SOEs in the stock market, to bring more SOEs into the stock market. We think that it would definitely increase accountability, transparency, and efficiency of SOEs. And it will also make the stock market more vibrant. SOEs need capital infusion, and the government doesn't have the capital anyway. The government is financially constrained. If you look at the capex has dropped to 2% of GDP since our primary expenditure is contained to hit our primary balance of 2.3%. So government is not going to have much capital to put in to develop or grow the SOEs. And the SOEs have to look at funding from outside. And isn't it a better place to go to the capital markets? Future infrastructure investments will require more public-private partnerships because government, again, with the capex coming down to 2%, won't have money to invest in large infrastructure needs, which have to be funded through institutional arrangements with pooled capital, which has to come again through the capital markets. So we believe as a government that if we are going to develop the infrastructure, we need to grow. The government can't pump in large amounts of capital into these projects. We need to look at ways of raising innovative capital to make partnerships. And therefore, we think the capital market is very critical. I will just give you a good example, a present example. For example, take the 500 megawatt wind power Adani project, which is now being spoken about. The government was negotiating with a foreign entity to do this project, right, at a tariff rate of US 8 cents. US 8 cents, and we think that that tariff is pretty high for wind power. And in our estimation, the IRR on the project is around 25% in dollar terms. You can imagine what a high IRR it has, right? Now, if our market was vibrant, we could have set up a special purpose vehicle to raise the $100 or $150 million of equity that is required for this project. We could have raised it locally through the market. The superannuation funds and all other market participants would have loved to invest in a project where there's such a high-yielding project. Just imagine how much we could have done. So Sri Lanka can raise large amounts of capital for massive infrastructure projects like that, which are priority for our country and our nation. The capital markets can play critical roles in this. And the SJB thinks that we can use it, and we are not going to let that go. So we think that there's a big opportunity, and we are taking it very seriously. Meanwhile, also on the deficit side, a major user of long-term capital would be a method to fund a mortgage market. We have around 5 million families in this country, and around 100,000 houses are built per year. And there is a current housing shortage of around 200,000 houses, which is alarming. Young couples, middle-income earners can't afford a house because housing loans are so expensive. The government provides only about one-third. The housing banks, the state banks which provide houses provide only one-third of the funding. Two-thirds of the funding comes from the private sector at high interest rates. There is no better time than now for the capital markets to provide the funding for developers to build projects and for financial institutions to raise capital to lend to the house owners. And we think that when you start developing housing in an economy, there are lots of ancillary growth that takes place. It stimulates the economy because there are other sectors that grow along with it. And today, for the first time, we are having single-digit inflation, right? And interest rates, single-digit interest is coming down, so which means that householders can afford to take those loans and pay those loans back in 20 years. So there will be a lot of young people who can go in for housing and be able to afford to pay this back. We think that the capital markets can play a critical role in this. Sri Lanka, on the other hand, I have another important thing which I say, Sri Lanka has to grow. We need to create 2 million jobs over the next 10 years. 1 million to replace current low productivity jobs, and 1 million jobs to expand our labor force. Now, how will we generate jobs? You think the government can invest that money? This will require many new businesses to be set up. And if there are new businesses that have to be set up, this will require long-term, higher risk growth capital. And from where will it come? I think from the capital markets. For new companies, new firms to be able to have access to funding through the capital markets. Therefore, we think that the capital markets are going to play a key role in the economic model that the SJB is envisioning.